Hello, here are my accounts for gold. So I wasn't planning on doing a gold update because there are so many different accounts that are viable right now, but a lot of people seem to want it, so here it is. I am more interested now in looking for the bearish scenarios to invalidate them to give the bulls the highest probability. So I will start with those. So the first scenario here with the bearish count is counting this as a 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 5, 4, 5, and so on. This is the most bearish scenario basically. It's stacking 1-2s. Here it's a low probability because this is so much bigger than this in time. Time is never an invalidation, it's just a guideline, but it lowers the probabilities for this immensely. And also, if you are a bear, you don't want to take out this at 45.1 because that lowers the probability for this even further, being a wave 2. And the invalidation is taking out this at 46.27.1. If you do, the bears does not really have an option counting this as a 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, and so on, stacking 1-2s. It is not breaking any rules, it's just breaking a lot of guidelines. Then the alternative is this, the most bearish alternative. Here you circumvent this issue with wave 2 here by having wave 2 of a higher degree here, because then you count this as a 1, 2, 1 WXY 2 in a wave 2 here, and then 1, 2. But if you have wave 2 here, this wave 2 becomes so much bigger than this wave 2. So that lowers the probabilities for this scenario as well. So there's not really any way around it to have this 1, 2, 1, 2, 1, 2 scenario to give that the highest probability. So therefore this has a low probability scenario in itself. And also same here, 45.1 for a low probability wave 2. And the invalidation is taking out this at 46.27.1, giving the bulls the higher probability. The last bearish scenario is this one. It's not the last, I have one more, but this is the bearish scenario I have as of right now here. So ABC 1, 2, 3, 4, 5, a leading contracting diagonal. Here the bulls, they want to take out this dotted line before taking out this dotted line, because if you do, then this channel is no longer contracting, it is expanding like this, and an expanding leading diagonal is so much more uncommon than a contracting leading diagonal. So therefore bulls are looking to take out this line before making a new low here to give the bulls the higher probability. Then if we move on to all of the other possibilities here, so if you do not like Elliott wave, I suggest you turn off the video right now because there are a lot of different counts. Here is the highest probability finished double zigzag for the bulls, so ABCW X ABC in a wave Y. And now we are looking for a 1, 2, 1, 2, 1, 2, 3, 4, 3, 4, 3, 4, 4, 5, and so on, looking for higher prices. We did not take out this line here in wave X, which is great for this scenario, but we hit an uncommon fib target for wave Y, lowering the probabilities for this scenario a bit. And also this is hit, which is a low probability wave 2, but this is bigger than the usual wave C, so it kind of evens out if you put it like that. And the invalidation for this scenario is taking out this low. But as I mentioned, I am looking for invalidating the bearish scenarios one by one instead of jumping on the bandwagon here. Everyone has their own style of trading, but yeah, you do you and I do me. So this is one of the highest probability that we are indeed finished over here and now are looking for continuing the bullish run. The other possibility is counting this as an 1, 2, 3, 4, 5 in a wave C, a wave 1 in bear, a wave W in a W here, X and a Y, a double zigzag, or counting this as a W and then X in a more sideways corrective structure and then moving up, taking out this, or counting this as a wave C, as I just mentioned, that we are indeed finished. This wave 4 is a bit low, is a bit short in time, lowering the probabilities for this count, but nonetheless it's still viable. So the bulls, they want to take out this, because then at least they are not basically risking a deep retracement for a second zigzag. So that is at 5061.8. And also here we hit this low probability wave 2, the same as before, but this has the same count as the other one. So, and if you were to count this as a wave 1 here instead, so 1, 2, 3, 4, 5 bearish, then you do not want to take out this, the low probability wave 2 at 5402.9, because if you do, this is a low probability wave 1 as well, giving the higher probability for the bulls. Then if we move on to the double zigzag here, so you can count this as a W, X, and then A, B, C in a wave Y. If we take out this is the invalidation for this scenario, 4577.3, then this is no longer valid. We did not hit this line for wave X, which is great here for the bears. But as I mentioned, the bulls want to take out this invalidation, same as the other scenarios as well. So if we move down here, it is a double zigzag going on, but then we are then looking for higher prices afterwards because this is a corrective structure. So it's bullish in the long run. Then you can count this as well like this, W, A, B, C here for a wave X, and then you have a wave Y, and then you move up. So here, bulls want to take out this low probability deep double zigzag correction at 5115.6, because if you do, it's a higher probability of having more sideways wave Y, and then you move up taking out this high. So I think you kind of see this common denominator between all of these scenarios. You have the low probability deep double zigzag, the invalidation, low probability wave 2 for the bears, and so on. You want to basically invalidate them one by one to give the bulls the higher probability. So we have two more scenarios here. So this is a bigger WXY with a flat in the ending. So W, X, and then A, B, and you have this C in a wave Y. Here we hit the minimum target for a flat, which is great for this scenario. And you don't want to take out this, the expanded flat wave B invalidation at 4948.6, because if we take out this, it's a low probability for this particular scenario. And also you do want to take out this at 5115.0, as I just mentioned. That is just like a fail-safe for this scenario as well. Even if we are looking for a flat, you want to take out this sooner or later. So the last possible scenario I can count here is this. So ABC, W, X, and then ending with a triangle. So A, B, C, D, E, and then you move up. So here, this is a low probability wave 2 here of the triangle, 4950.8. If you hit this, it's a low probability for this scenario. And then you are instead looking for some other scenarios that have not this as the invalidation. So these are all my possibilities. So you kind of, as I mentioned, you kind of see the common denominator as I just mentioned. You have all the different low probability double zigzag, you have the wave 2s, they have these, the invalidation for these scenarios. So you want to break these one by one until nothing else remains than a pure bullish scenario moving up. At least that is what I am looking for. So sorry this video became so long, but there's a lot of different possibilities right now because we are in the middle of a deep corrective structure. At least that's the highest probability that we are. If you found this analysis helpful, feel free to subscribe. And you can also find MotiveWave resources at mellantrading.com. I'll see you in the next one.